Okay, so if I'm to answer your question, how to understand accounting, you want to know how to understand accounting. The first thing I will say is you need to know what accounting means. Now, there are many definitions of accounting, but essentially, accounting has to do with three things, which I'll call the IRC. The I is for identification, the R is for recording, and the C is for communicating. So, accounting is basically the language of business and is the process of identifying, recording, and communicating the financial story of an organization. So, any other definition is actually going to be a reflection of what I just explained, or what I just defined. So, to understand accounting, as I said, you first have to know what accounting means. We have put that aside. We're done with that. The next thing is there's what we call the accounting equation. You need to know the accounting equation. The accounting equation says asset is equals to liability plus equity. So that is important. Now, what is an asset? For a layman, you can say an asset is simply what the entity owns or what an individual owns. But I will say add controls, owns and controls, so that as you move ahead, you can now understand why the control is there. So for liability, you can say what the entity owes. So for an asset, you're talking of what you own and control. For example, your cash, your inventory, your equipment. And for liability, it is what you owe. For example, you owe people you loans, you owe your bank a loan. You have unpaid bills like the electricity company and all of that. So that is what you owe. That is a liability. Then for equity, equity is the stake of the owner after all the debts have been paid. So that is what is remaining, the remaining stake after you have paid, or after the entity has paid all the debts. So what is left is for the owner, and that is what we call equity. So first, you know what accounting means. Secondly, you know the accounting equation. Thirdly, there are 6 terms I want you to know, and I've explained some of them partially. Assets. So when we say something is an asset in accounting, we are talking about resources that provide future economic benefits. Those are assets. They are resources and they provide future economic benefits. I always urge you to watch my older videos because I've explained all of this very clearly in older videos. So you can go to Finance Simplifier on YouTube or on TikTok, Finance Simplifier, and you'll be able to watch my old videos where I explained clearly what an asset is according to the guide of the International Financial Reporting Standards. Good. Now, liabilities is also another term that you need to know, and there are obligations to transfer assets in the future. So if there's a present obligation to transfer assets or resources embodying economic benefits in the future to settle that obligation, then that is a liability. Then you also know you have to know what an equity means. That is the residual interest in the asset. So when you have settled everything, all the debts, the suppliers, the contractors, all your debts, everybody has been settled. All the people, your creditors, you have settled them. You have settled your loans. You have settled those who rank and those who do not rank. Everybody settled. The residue, what is left, is what we call equity. Then there's also a need for you to know what is revenue. Revenue is money earned from selling products or services. So when you are a supplier and you make sales, that's the amount you get is your revenue. Okay? And then there's also a video I did explaining the difference between revenue, income, and profit. Go and watch it. You watch it, go to the Finance Simplifier on YouTube, on TikTok, and watch my videos. I did a very clear explanation there. So also you need to know expenses. Expenses are costs incurred to generate that revenue. If you are going to make sales to get revenue, you may need to do advertisement, you may need to pay direct labor, you may need to do some admin, you may need to do some things. All these are different classes of expenses. Some are direct, some are indirect, but they are all expenses, and they are costs that you incur in order to generate revenue. You need to know expenses if you want to understand accounting. How to understand accounting also, another term you need to know dividends. Dividends are profits that are distributed back to the owners, the shareholders. So they are not just buying a share of the company for nothing. They are buying it because they expect to be rewarded, and their reward is the dividend that is distributed to them as the shareholders. Then also you need to know the big three financial statements. We talk about the balance sheet, which is the statement of financial position. That is very, very key. You need to understand it. That is where you see the assets, you see the liabilities, and you see the equity, and it has to balance. The assets must be exactly equal to the combination of liabilities and equity. And that is, you see the accounting equation that we talked about before in play in the balance sheet, which is also called the statement of financial position. Also, you need to know about the income statement, which we call the statement of profit or loss, another comprehensive income. This is the statement that measures performance. So there you are going to see whether you are profitable or whether you are not making a profit over a period, usually 1 year. Sometimes it's even for a month or a quarter, but it's usually 1 year. So also there's also the statement of cash flows, where you'll be able to differentiate between cash and profit. Profit is not cash. Profit is prepared based on accrual basis. Sometimes you see a big profit, but you don't have cash. So you need to separate profit from cash by preparing the statement of cash flows. And there's the direct method and the indirect method. But because you are beginning, let's not go so deep. But if you want to watch as you progress, I have done the videos already. Go to Finance Simplifier and watch those videos as you make progress. But take it gently, step by step. How to understand accounting? What other thing? You need to know the double entry rule. That's the golden rule of accounting. The golden rule, which is for every debit entry, there is an equal and opposite credit entry. So you need to know that. And then that brings us to what is even a debit and what is a credit. So, but to say transactions affect at least two accounts to keep the equation balanced. The essence of the double entry is to keep that equation balanced. So you have one side and the other side. The left-hand side, the right-hand side. So the left-hand side is what we call the debit side, and the right-hand side is what we call the credit side. And all debits must have corresponding credit. Yes. So now I've explained that debit is the left-hand side and credit is the right-hand side, right? Good. So the rule is that total debits must always equal total credits. What else do you need to know? You need to know standards and gaps. If you're operating in the United States of America, for instance, you have the US gaps. Very, very important. You need to know about revenue recognition. You need to know about matching principle, objectivity principle, prudence concept. All of these things, I covered them, so you can go and watch my video on accounting principles, accounting concepts, accounting conventions, so that you know all of this. So also there are standards issued by the International Financial Reporting, that's the IFRS Foundation, International Reporting Standard Foundation. So you need to know about them. There are IASs and there are also IFRSs, all together called IFRS. You need to know they govern the preparation of financial statements. So gaps, irrespective of the country, accountants all over the world, they have some generally accepted accounting principles. Some are written, some are not written, but they follow them in preparing financial statements.